staying tuned to ADBN. We are back for our discussion segment on the Market Report show right now, and Doc is prepared and ever prepared to answer some of the questions I raised as a poser in the introduction. So, hello, Doc. A very good day to you.
A good day. Thank you very much.
All right, so let's get down to our discussion. First and foremost, the major thing I will need to ask you first is that, the global gas production has become a talking point since 2018, particularly, immediately after the COVID-19 period. But can we have a view or your perspective on the global gas production so far?
Yeah, the global gas production is definitely increasing, and more so because a lot of portfolio companies like the BlackRock, hedge funds, they are looking at primarily funding, projects that have to do with cleaner forms of petroleum energy, which gas qualifies. And more so, we are also looking at this coming at a time where the utility of gas has been validated. You remember during the COVID era, when a lot of the European economy, was struggling at that point, even after the COVID into February 2022, the Russian-Ukraine conflict. A lot of those European countries were struggling to, be able to power their economy as it was opening up. So most of them that couldn't get gas because of the conflict resorted to using things like coal. So after that, I think the world became very clear that yes, the validity of gas is up, and also developing nations like us that continue to talk about the concept of just energy transition are cognizant of the fact that you need to use the resources you have to get what you want and to develop your nation, especially because Africa, on the just energy argument, is contributing just 4% of the global emissions, or less than that. So countries in Africa are saying just energy transition is the way to go. Use the resources you have to get what you want in a responsible way. The most cleanest form of your petroleum energy, which is gas, and then exploiting it in an ethical and environmentally responsible way. So, and the other thing is that you now understand that there is no way that you can industrialize a nation without the consumption of energy. And one of the energy that we can readily consume and create that industrial effect is gas. So that is what has created that awareness for different nations to start to develop their gas assets, and of course, Nigeria not being an exception. The only issue we have in Nigeria is that we haven't quite been able to get the facilities that we need to be able to fully harness the utility value in the gas value chain.
Very interesting. Have you mentioned Nigeria, but we also saw that the entire Africa is also having an increase in gas reserve and production. What's your take about African gas reserve and production? Even though I know you definitely want to tailor it to Nigeria, but let's have an overview of other African countries like Angola, Egypt, and the rest of them. They're also doing one or two things around gas reserve and production on the continent.
Yeah, definitely. I mean, when you are looking at the gas, the whole gas concept, a lot of nations are looking at industrializing. As I said, that is the theme in Africa. Most so when you are looking at things like the Trans-Saharan gas pipeline, it means that there is an opportunity that opens up for countries across that corridor to begin to export their gas even to Europe, ultimately through Morocco. So that means that ultimately, as the infrastructure and facilities begin to open up, the possibilities become quite, different, and most people do not want to miss out of this opportunity. But more so, it is the fact that because, for example, I come back to Nigeria, we have been able to take out the fuel subsidy. If the price differential alone creates a business case for a different interest in the development of gas resources, I think it's very critical. So other nations are facing the same thing. A lot of the African nations don't even have fuel subsidies as much as we did, and so that price differential has already existed. So on two parts, they are developing their gas assets. On the first part, that has to do with them getting to industrialize the economy. On the second part, because as the Trans-Saharan pipeline or other pipeline become very much, kind of inclusion, there is a different perspective to getting a significant amount of money from exports and from gas exports for that matter.
Exactly. Now, having said so much, linking the global perspective to African perspective, for the benefit of some of our viewers who will be hearing about gas issues, about gas reserve, gas production, can you also help us to extray or assess or give an assessment of Nigerian gas sector, because that is your field, and I know you will definitely help us to understand that, and many of our viewers would like to hear your assessment on the Nigerian gas sector.
All right, thank you very much. So, just a bit of an overview. Nigeria has about 209 billion cubic feet of proven gas reserve. And of course, we are harnessing just a fraction of that, and mainly from the associated gas component, because there's what we call associated gas, which is gas that is derived as a result of the the crude exploration and all of that production activities. And then we also have the non-associated gas, which is gas that is derived from the exploitation of gas reserves itself. Now, if you look at the economics of both the associated and non-associated gas, the associated gas is much more, economically friendly in terms of the physicals, the physical side of things. Why that is the case is because you have some components, some liquid components, LPG and other liquid components that drive better market value than the CNG itself. And so currently the focus has been on taking associated gas, stripping off the liquid components and selling as a different value chain, and then taking out the CNG and then using it in the gas sector. But there hasn't been a concerted effort towards developing the non-associated gas. That is where we are having problems, because right now, if you look at the project economics of an associated gas, even if the profit value of the associated gas is quite rich, because it's not because of the gas itself, but because even if you make a loss in the gas side of things, you'll be able to make up with the liquid components that you're selling and be able to make a profit overall. That's how it works. But the question we're going to ask ourselves, why is the gas economy, the actual gas economy for CNG, for example, quite lean? Because that will tell us why people are not going into exploiting non-associated gas reserves that have dry gas, predominantly CNG in them. The reason is this. The first and foremost issue is the sector that utilizes gas, for example, power sector, are still having legacy debt. There's a lot of legacy debt surrounding this sector, which scares investors a lot away from it. The second side of this stuff is the issue of infrastructure. Unlike the liquid components that can be readily stored and transported safely, like the LPG and the rest of them, the CNG is quite volatile and needs very, very good care when you're handling it. It's not just something you can readily store and then leave it and then not put the right safety, considerations around it. So all of these have made it that people are more looking at dealing on the associated gas and less about the non-associated gas. So what is the way forward in all of these? It means that we have been able to harness barely maybe 5% of our gas possibilities that we could actually do. And right now there is a lot of literature that shows that as we expand our crude production, we are now flaring even more than we used to flare before now. And that is what we expect, especially with the fact that we haven't been able to fully harness our gas reserves or gas possibilities or quotations based on limited infrastructure. So what we need to do going forward to be able to allow the CNG value chain to be something that is profitable as a standalone resource, highly profitable, is to look at the physical and look at government assisting with the development of infrastructure that so that that would now form the foundation upon which the private investors will build on.
Exactly. Now, talking about private investors, from what you have said so far now, Doc, how can we, appraise this in the aspect of the upstream, middle stream, and downstream? Midstream, upstream, midstream, and downstream of the gas sector in Nigeria.
Well, when it comes to what by upstream of the gas sector, we're talking about the production of the gas itself.
Exactly.
Yes. You need to understand that we are limited across all the value chain, whether it's upstream of the gas, downstream or midstream. And I'm going to contextualize that for your listeners. Now, if you look at the production side of things, we are encumbered because a lot of the oil companies that set up legacy facilities have set it up just to get crude, process the crude to the minimum required spec, and then sell it off and then go their way. I don't think there were considerations for gas, and I'm going to explain why. Now, take an offshore field that has a number of reserves and is producing gas and crude. Now, some of those offshore fields are going to have things like weak reservoirs and things like strong reservoirs. Now, if you end up taking all the fuel from those fuels and then mingle them all the way to a terminal point on the onshore, now what you're going to do is you end up having to cut off gas from also being part of that flow into that pipeline, and you're going to limit the gas. The reason is this: if you do not limit the gas in that flow, in that pipeline that is coming into the mainland, there will be an increased pressure in that pipeline, and that pressure is going to be coming from the high pressure reservoirs. And ultimately, that pressure will back pressure the pipeline, and that will shut off the reservoirs that are weaker. Now, if you think about that, how much gas are you sending across, and what is the worth of gas, and how much are you losing from shutting off your reservoir? That is what the oil companies see. And so they choose to flare the gas rather than send it through the pipeline that is coming with crude, because it will mean they will shut off their weaker wells. So that is what has happened. And why am I saying that? That in concept limits us from being able to develop our gas reserve from a production standpoint, because people don't really want to produce gas, because it means it will back pressure their production and will shut off their oil wells, and oil has a better value than gas in terms of money. That's the first challenge that we're having. What could have been the solution would have been, at the issue, the oil and gas companies would have built a crude pipeline separate and a gas pipeline separate. That could have been the answer to that problem, so that all those facilities send their gas in quantum, and that gas can now be developed for industrial development as well as for export. Okay? Yeah. Now let's go into the midstream, if you want to call the movement of gas the midstream or the transportation of gas. The pipelines are very few. The Nigerian pipeline network is, not as much as we would, be able to have managed our resources. But they're struggling. We're having things like, India, for example, having more than 29,000 kilometers of pipeline, gas pipeline, and they don't even have any reserve. They buy from other people. Conversely, in Nigeria, we have less than 8,000 kilometers worth of pipeline total infrastructure, but then we have 209 trillion cubic feet of gas. And when you look at the correlation, you find out that the number of pipeline assets that different countries have correlate strongly with ultimately with their industrialization levels. You cannot industrialize if you don't consume energy. And much of the civilization of today is banking on gas as the fuel for industrialization. So what that means is that we are lacking in the aspect of having pipeline infrastructure. Now, even when we are talking about the midstream itself, which is the whole gas transportation value chain, we are also lacking when it comes to investments to be able to roll out all these containerized and kind of modular approach to transportation, which is like using the CNG trucks and all of those CNG mother station and daughter station technologies. Those require very huge investments, and we don't have that many people investing in the value chain. In fact, the federal government through the presidential CNG initiative is now having to operationalize that more value chain and try to start that value chain altogether. Okay. Now, if you go to the consumption side of things, you also have issues. Like I said, the power sector, there's a lot of legacy debt, right? If you now go into the petrochemical sector itself, they feel that the gas prices that are being put for the gas-based industries are quite low. So selling to gas-based industries are not going to make much. If you look at the gas pricing caps, the gas-based industries have the cheapest gas price, and that means that you don't get much from selling to them. You now be selling to things like residential applications and power, but then there's a lot of legacy debt in that aspect. So most people are developing their gas again for export. But remember, once you develop for export, you are collecting economic rent, because if you are not consuming the gas in Nigeria, you are not industrializing. So we are down now to the chicken and egg problem that is subsisting across what you were calling the gas upstream where the production is done, the gas midstream where the transportation is done, and ultimately the gas downstream where the consumption is done.
Exactly. Having noted so much in this there from the upstream to the midstream to the downstream, it shows that there are lot of issues, particularly, one of the literature I'll have to embark on in studying before I come on the show was talking about the structural issues and regulatory issues. What do you have to say about the structural issues and regulatory issues affecting the gas value chain in Nigeria?
Well, you see, one of the issues that is affecting gas value chain in Nigeria is the fiscal. That's the primary issue that is affecting gas very much. The gas economy, as I said, is not as favorable compared to oil. That's the first problem. The second issue is the issue of bankability. Right? How do you know that this gas you are producing and you are proposing your infrastructure for domestic consumption and domestic industrialization? How do you know you are going to have an uptake that is going to come, and how do you know they are going to buy this at a price that is going to get you money? That's why a lot of people just do it for export, because it's a more bankable approach. One, for example, somebody can commit to say, I'm going to be buying this amount of gas every month for the next 10 years from you. But how do you know they're going to have the liquid cash to be able to sustain their agreement? So a lot of people now suppose that it is better to get an export-oriented market, and then that means that those guys are backed by very, very strong financial institutions, and that will help you to be able to hedge against your risk, which are the bankability risks. The other issue is the regulatory issue you're talking about, which is that there is no clear definition on how the ownership of gas molecules is done. When you come to oil, you have like production sharing contracts where the company puts all their money in, develop it, and then pays back royalties, taxes, and all of that to the federal government. There's a clear line of sight on who has ownership of the molecule. When it comes to the things like the JV arrangements, the government brings their money, the investors bring their money, and they equally share the molecules. They divide the production that they get equally. The issue has always been, how is the gas molecules owned and shared and all of those sort of thoughts. So investors are now worried that if I put my money and the eventual definition of those who owns what and that doesn't favor me, how does that pan out for investments that require at least 15 years to have a break-even and start making profit?
Very interesting. Doc, before I let you go, I need to also ask you this question, particularly on this gas aspect. We have seen some of our subnational government investing and also pushing out policy to attract investment in the area of gas. But some of the challenges you have mentioned, do you think these challenges will be a discouragement to some of them?
Well, no, I don't think so, because, for example, what the subnational government does have to do is to be able to stimulate growth, right? You know, look, it's a chicken and egg problem. Am I going to be, audacious enough to come into an area where there's no consumer of gas, or for example, for automotive applications, and then set up a gas production plant there? That's one thing. Or am I going to wait and then find out that, oh, this company has changed their facility into, their cars are now CNG enabled, and then their company has changed, and I'm like, okay, there are 3 companies. Maybe the thing will expand. Let me open a station. The second scenario is more plausible. That's the truth. Because investors are more risk averse in terms of their approach to energy investment. They want to do that, okay, there's a paradigm, and they're adapting their business propositions to the paradigm. So what can government and the national do? Stimulate growth. Make sure that the government vehicles are all converted to CNG, and you will see an investor that will take money and say, I'm building a CNG plant because at least my primary customers are government and the subnational, and all their vehicles, I can take care of them. Then you can even invite people to come forward to bid to provide the refueling services and maintenance support for these government vehicles that are CNG powered. That is how you stimulate growth. Once you stimulate consumption, you stimulate growth. Let me tell you, a number of times when we see, for example, in the US, when there's recession, what do? They send out stimulus to customers and consumers in form of checks to stimulate consumption. So start buying. They send out money, let them start buying so that companies can start producing, and so that the whole thing you can have an economic jumpstart. So everybody at the subnational level must have it in their mind that they must be able to stimulate that growth to a level industrial development that is backed by gas.
Very interesting. Prof, Doc, lastly, before I let you go, there's a developing story in the last few days in the week. NNPCL, Sahara JVL, and WAGL expand their fleet to over 160,000. What's your understanding and what's your submission on this NNPCL, Sahara, JVA, WAGL, expansion that we are hearing in the news in the oil and gas sector in Nigeria?
It's a welcome development and a strong indicator that Nigeria has gotten it right in terms of the economic fiscal reforms that is ongoing. Also, I think it's a litmus test to the capability of the current NNPCL leadership, which I have always said that there's a strong leadership, that if there's ever a time Nigeria can get it right, it'll be with this leadership team that we currently have. So we should only expect more of that to come, ultimately. And I think this is a time where Nigeria is taking ownership. We're not just leaving the fate of our energy sector in the hands of international oil companies. We have now decided to take ownership, build a sustainable petroleum ecosystem that would have much dividends for Nigeria and Nigerians in the long term.
Exactly. And having said so, because I also read President Bola Ahmed Tinubu appraising and the NNPCL management, appraising Sahara Energy, appraising WAGL, and appraising all the oil and gas sector players going forward. But one key aspect issue that many Nigerians, particularly financial economists, are asking, in your own understanding, when do you think NNPCL will come to the Nigerian stock market? When do you think they will make available the shares, the dividends, so the Nigerian can partake as a shareholders of NNPCL on the Nigerian stock market? When do you think that will happen?
I can't speak for them. I know that within 2 years they should be able to achieve that. That's the thing. So there are 2 things that come into my mind when you talk about listing on the stock market.
Exactly.
What is the price that people are willing to pay, or what value do people place on that company, and how do you get yourself to that value? Right? That's the first thing. And 2, how stable are you at that price in the stock market? Because you can start at a very high price, and by the time people start buying your stock and demystifying your entire corporate structure, your thing will fall very drastically and never pick up again, or sometimes you will never even pick up. So we've seen a lot of that. So The goal is to come in at the right price point and stay there and even improve. The goal is not to rush and get there, and then we find out that you are coming in at a very low value that undercutting your strength that you should have come in, or that you're coming to the market space and you demystify, and then the price begins to fall rapidly. That's not what we want.
Exactly. Your submission is quite instructive, because a lot of financial economists are worried that it's over how many years, close to 8 years, that NNPC have been unbundled, but they are yet to come to the stock market. But for Dangote, people are also expecting Dangote to also come and be listed. But what's your perspective about Dangote? Because he's also taking his time. But from your perspective, what do you think is delaying his entry to be listed?
Oh, well, I mean, the Dangote is still expanding, as you're aware. It's expanding its capacity for refining even further. It's also getting to the midstream with 4,000 trucks. So again, this is also reinforcing the value that you now bring to the stock market. You want to execute all the plans that allows you to get market share and to be able to get a huge command of customers both abroad, and then assert your authority in the market. That is exactly what will give you a very huge command in the stock market. Not just watching in before you can assert your command in the sector.
Exactly. Doc, I appreciate you for coming on the show today, and all your submissions are instructive, very insightful and resourceful, and I know authority will definitely take note of some of the things you have said, because Nigerian gas value chain is huge, and we can't just leave it out like that. So, but thank you so much for coming on the show today, sir.
Thank you very much. Enjoy the rest of your day.
All right, sir. All right, sir.